We had 535 new insider trades come in last week, almost all of them totally useless, but we looked through them all to find those handful that are high signal and can help us outperform. Let's take a look. So we're actually starting to see a bit of an increase in insider purchases as we come out, as you can see on kind of the weekly data here, and then obviously very clear on the daily. As we enter the back half of earnings season, and a lot of companies have already announced their earnings, the insiders are now able to start buying and selling the stock again. So we're continuing to see that number rise up, and we'll probably go from we were below 500 in the weekly number of insider trades. We're now above 500, and we'll get above 1,000 here soon. Looking back on the past week, you can see actually a pretty bullish week, well above 40% insider trades that were buys, and then over the whole month of October, which we are now at the month is now over, we can see well above, again, above 40%, well above the median in terms of the percent of insider trades that were buys. So a pretty bullish month, and in fact, the most bullish month really since April, when the big dip due to the tariffs that Trump was putting on. Things are looking fairly bullish. Obviously, this is the first month in the quarter, so that's how it is. But you'll actually remember that this quarter started out a little slower, and it's actually been picking up now. So we've crossed over the percent of insider trades that are buys, and you're able to see that over here as well. As you can see, we've been bullish pretty much all of 2025 outside of the very beginning of the year, but once March hit, really we crossed the bullish threshold, and then once April hit and the tariffs came out, we crossed above the very bullish threshold for just a brief second there, and then we've now been hanging out, just kind of at a pretty typical value, really, in a pretty typical range. The market tends to go up, insiders tend to be slightly bullish, and that's kind of where we're at right now, a pretty typical setup. However, as we mentioned, things starting to creep up a little bit with the most bullish month now that we've had in a while, and you're seeing here too, it looks like the sentiment is starting to curl up there a little bit at the end. So we'll see how the end of the year goes, but it looks like insiders are getting a little more bullish. They've been bullish throughout the year, but getting even a little more bullish now. Taking a look, I've added a couple new charts here to the most bullish insider trading over the last 3 months. The companies with the most bullish and most bearish. We're removing all the low signal trades and then seeing how many insiders are buying versus selling and ranking essentially the companies there. So a couple new additions to the list here, which we looked at, and we'll see as we look through some of the trades here real quick. But OBK, Origin, Bancorp here had 9 different insiders buying the stock on the exact same day, which was just a couple of days ago. We also had, let's see who else joined just recently. We also had Eastern Bancorp with a similar situation, a whole bunch of insiders again buying the stock. Unfortunately, a couple of banks, which I don't tend to like, but what are you gonna do? WD-40 company here, which we just looked at the other day, which is actually another pretty interesting situation where the stock they had a pretty good earnings. The stock is down 20% plus over the last year. They had good earnings, stock goes up 13% or so, and then it gives back all of those gains, and then you have the insiders stepping in and buying while the company is trading at a pretty low, one of their, near their lower historical valuation. So that's another pretty interesting situation there. We haven't looked at as many sales this week, just there's been so many buys coming in, we haven't had time to look quite as many sales, but a few that we have noticed coming in is you've got Corp here, which had just endless amounts of selling after the stock had a huge run up in the last month or so. Tons and tons of selling there. Fix, I don't actually know what that company name is. Let's see real quick. There's WD-40. Fix Comfort Systems has some selling after it looks like they had a little bit of a gap up there as well after earnings. Some insiders decided to take a sale there. Who else do we have here? Anybody else joining the list? Got RTX, which I believe is Raytheon, right? Or old Raytheon. Maybe they're not called that anymore. RTX Corporation, which let's see, they also another earnings gap up, and then some insiders selling. Let's see if the same thing happened here. I'm gonna stop guessing at company names, though I would have gotten that one right. Applied Digital, they did have earnings as well. You got a couple of insiders starting to take some sales there. So oftentimes what we like to say, insiders tend to be a little early. If anything, I don't think insiders selling or them appearing on this list necessarily means, definitely doesn't mean that the stock's going to go down. Stocks tend to go up, so that's a tougher bet. But it does mean that the insiders are willing to get rid of the stock at this price. It would be a smart idea, a good idea to start paying a little bit more closer attention if you do hold those positions and start to pay attention to the price action and the story. And if things, when you do start to see things stumble a little bit and you have insiders selling, that can often be a good sign to, okay, maybe take a step back and we'll wait for the story to fix itself or for insiders to step back in or something. So that is a good overview there. Let's go take a look. I've already set the dates here, so let me we'll look at the last week, start with the purchases, and we will look through the transaction. Start with the transaction values. We're going to try to get through a bunch of these as quickly as possible. So we've got some private placements here, some IPOs, another IPO, which these are the same, private placements, private placements. We have Fairmount funds, 10% owners we tend to ignore, and a 10% owner, which again, so you've got a $10 million purchase here, which is such a very flat amount that there's a pretty good chance this purchase is actually part of, yep, and there you go. They announced a pricing of a public offering, so this is actually part of a public offering, even though they didn't mention it in the footnotes. What else do we have here? Kinder Morgan, so the exec chairman here at Kinder Morgan, buying the stock. He just doesn't really have a particularly good track record. He's made a ton of purchases. All of his historical trades are purchases, 70 plus previous purchases, but the stock's basically flat every time he buys. Now, this was one of his largest, I believe this was his third largest purchase ever, and it's his first purchase in 5 years. So both of those are definitely notable, make this one stand out a little bit more, but just with a track record as long as his and having very flat returns, it's just not enough for me to be interested. And then the company itself is pretty boring, doesn't move very much, all of it doesn't add up for a particularly exciting insider trade there. Moving on, this is another, what do you want to call it, purchase agreement. Here we've got Neumora Therapeutics, which I'd actually be interested what happened over the last day or so. So it looks like it actually held on to the pop that it had a nice old pop here, and then looks like it's held on to that a little bit. But this one specifically was one, you've got the 10% owners, which again, we tend to stay away from 10% owners. Two, this is part of a public offering. Again, I don't know exactly what kind of public offering, but this one is just insiders deciding to buy the stock. Now, it's not 3 different insiders buying $5 million. It's just Arch Venture Partners, and then Christina Burrow is the actual person working there that's on the board at Neumora Therapeutics. Fourth largest purchase by these insiders. They have very good historic returns too. We normally just avoid, Arch Ventures doesn't, but Christina Burrow does actually have pretty good historic returns. As you can see, we tend to avoid 10% owners buying the stock. You can also see that only about a 50% win rate here. Terrible track record on the sales. Also, it looks like while Christina might be her own entity in some situation, these specific funds have only one previous purchase each for both of them, and that did not go particularly well. They did recently announce, the reason it popped recently was because they announced that their weight loss drug had some good results in a mice trial, which some of the smarter biotech people I follow seem to view that with a little skepticism, though obviously good results better than bad results. So there's a little bit of positive there, but overall, I think the stock is also up now. It's gone from 173 to 293, so up 50% plus 60% in just the last week or so. Quite a big jump. On top of that, with just kind of a mediocre insider purchase, not quite enough for me to take a look. Everest Group, insurance company, actually pretty compelling insider purchase here. Another 2 insiders bought the stock here. 2 directors, they bought, $3.5 million purchase, and I think like $1,950,000 purchase or something like that. Pretty good track record for an insurance company. Not this guy, actually. I think maybe the other one has had a decent track record. Let's see. Oh no, neither one, I guess, has a particularly good track record, but increasing the holdings by 300% here. For this director is notable, his first ever purchase. The company also is trading below its book value, below 1x book value. So because of that, they're restarting some share repurchases here. They also have recently sold their rights to one of their, they agreed to sell the retail commercial insurance renewal rights to AIG because they want to narrow their focus on reinsurance. And then they're also going to resume meaningful repurchases in Q4, and they're trading below share buybacks. So you've got insiders buying the dip, trading below book value, restarting share buybacks. Not the most highest signal insiders themselves. They don't have a great track record, but overall, for an insurance company, a pretty good signal, but insurance companies aren't very interesting to me. So not for me, but might be if you're interested in those insurance companies. They also pay like a 2.5% dividend or something like that. Now on the complete opposite end of the spectrum, we've got Celestica here, AI data center provider, up 400% in the last year. This is their first ever purchase by any insider at Celestica ever. And then obviously the first ever purchase by this Laurent Kellner, first ever purchase there. If we take a look at the price real quick, it's been on an absolute tear, obviously up 400% in the last year. And you can see it's quite a bit above the 20-day moving average here in the 50-day. To me, I would probably wait. I actually think not the highest signal insider purchase because it is just one director buying the stock. However, nobody's ever bought the stock before. It's a $2 million purchase, has a ton of momentum. The company's fundamentals, it looks a little expensive optically just because, the price has gone up 400%. 100%, trading at a 44x PE ratio. But the reason the stock is up so much is they're growing like crazy, and they don't project that to slow down at all, at least through 2026. And they're projecting 40% EPS growth for 2026, which is a massive amount of EPS growth at a $40 billion company, is kind of wild, which does make this high PE ratio not seem so crazy when you're growing earnings at an insane 40%, and they don't see that slowing down at least through next year. So for me, this is a pretty interesting momentum play here. Clearly, a company with strong fundamental momentum, strong price momentum. You can see the EPS estimates just climbing. However, it's as you can see, compared to the 20 or 50 day, it's getting up there quite a bit higher than where it typically ever gets. So I would be interested in waiting to see if this price is going to come down closer to like $300, and we might be able to get a deal. That's a pretty big dip. So maybe we don't get quite that much, or somewhere in that 3 to 320 range, we might be able to get the stock to come down, and then it would have caught back up to where the 50 day and the 20 day are. And then at that point, you have a very nice little momentum play where you can just kind of ride along. I'd probably pick the 50 day, but you can just kind of ride along one of these. And I guess you could buy when it gets above the 20 day, but then hold it and don't plan on selling until it falls below the 50 day. And as long as the AI play continues to work out, as long as the EPS estimates and growth continue to come through, I don't really know what's going to slow this down. And it looks like, at least in their opinion, 2026 seems to be pretty smooth sailing. So that's a very interesting momentum play there. Quickly, we've got that interesting situation at RYES Corp, where the company is trying to get access to be able to restart a mine. The county is saying, no, you can't do that. RYES Corp says, okay, well, this is the one that has the public offering, but it was done at 25 cents, which is above the current price, and a 45-cent warrant, which means the stock has to go up in the next 3 years. The stock has to go up at least 2.5x for them to make any money on the warrant. And the way they think that's going to happen is either the county lets them open up the mine, which the county doesn't currently want to do, so they're waiting on a court to make a ruling, which they believe will come in the first half of 2026, and then they either restart the mine, or the management team at RYES claims that if they don't let them restart the mine, county is going to owe them $400 million because they'll basically seize the mine from them, like the county government literally coming in and seizing the mine, which they claim is worth $400 million, and they would be due the fair value of the mine, which is the $400 million. RYES Corp only trades at $25 million. Obviously, if they got that money, it'd be a massive win for the stock. However, very tricky legal situation. I feel quite confident the county would not be interested in giving them $400 million for that. So we'll see how this plays out. Obviously, seems like some of the insiders are at least somewhat confident here. They did this money raise, however, they did raise the money just to last them throughout the legal situation here. So they needed the money so they could pay the bills until this legal situation resolves. A little too tricky of a legal situation for me, but a very interesting one nonetheless, and maybe somebody will dive in there and can find something more interesting. Booz Allen Hamilton, I don't actually entirely remember what this one is. It looks like a big ol', a 50% dip by now. This is a real turnaround that I'd be interested in, which we have seen a bunch of professional service companies with this same exact chart where the stock flew up after COVID and then has come crashing back down, and you're starting to see a bunch of insider buying there. You're starting to see some share repurchases going on there. Looks like the first ever purchase by the CEO here, which is fairly interesting. If we take a look, so this is just a totally normal open market purchase. So yeah, you can see first ever purchase after a litany of sales. So we got a couple things working for us here. Obviously, we prefer to see an insider with a really good track record. However, probably the best situation outside of that is an insider that has never bought before, that is buying for the first time after doing a ton of selling. So this guy's done 9 years of selling before flipping over to a buy now, makes a $2 million buy. Not the biggest holding increase, but still $2 million is nothing to scoff at. And on top of that, you have the stock down 50% in the last year. So you have a big turnaround. Looks like obviously things aren't particularly going well there. So what we would need to look at here, which I'm sure it's a similar story to all the other, and you can see CEO buys have been getting some action recently with insiders starting to boost up the stock after CEOs buy. We would want to figure out look, revenue down, EBITDA down. There's a reason why this thing is falling. Saw some strong growth in national security portfolio. So then looks like there's probably some government concerns obviously as well. Market environment, bifurcated market with civil and national security portfolios experiencing very different dynamics. Civil businesses face funding cuts, slower procurements, and longer lead times. National security has stronger demand, but with some friction as shorter funding increments. So they are cost reduction, focused investing, outcome-based contracting, revenue. They had to lower some of their guidance, it looks like. What I want to look through here, which we don't need to do right now, is just why is now going to be the time to turn around. And we've seen a few of these other professional service companies that have relatively strong stories where, they believe that either the certain markets are holding up pretty strong and they're seeing growth there, or they just believe that the macro cycle as a whole is kind of ending its downturn and things are going to start to turn around pretty soon there. So I'd want to know if that's what management believes the same thing here. Share repurchases at 107. Yikes, a terrible. They did authorize an increase. That's another thing you do like to see, though. Obviously, they've thought the company was undervalued for quite a while if they're buying the stock at 30% above the current price here, or 20% above the current price. But overall, the all the technical stuff, if you will, all the quantitative stuff, I guess, share repurchasing, stock way down, CEO buying for the first time after a bunch of sales, all of those look very promising. But in this case, for the turnaround, you would want to see, how do you know it's not just going to be this every quarter? Stock down 20% after a quarter, stock down 15% after a quarter. Why is now the time it's going to turn around? And obviously it looks like the CEO probably believes that's the case, as he is buying now for the first time ever. So another pretty compelling insider purchase there, another value situation, as most insider purchases are going to be value related, or at least most of the somewhat interesting ones. Another CEO purchase here at FTI Consulting, which again, another professional services company, a similar situation. In this case, that they actually had just things that turned around pretty quickly for them. So you've got a little bit of a different situation where you can just see, based on the chart here, that they had better earnings situation and stock price shooting up. And then now you've got the CEO also deciding to step in and buy the stock there. Let's see if there's anything else here. His only previous purchase was for $1 million back in 2017, and the stock went up for over 60% the last time he purchased it. He sold the stock 16 times between the previous purchase and sale. So here we've got maybe even a slightly better setup than that Booz Allen Hamilton one, because he has made a purchase before. Stock went up 66% in the next year, and then sell, tons of selling, and then is now suddenly turning around and buying another $1 million of the stock for the first time. Plus, in this case, I'm sure the technicals look better. It has now jumped above the 50-day and the 20-day, and so now you at least have some technicals you can play with and hope to see it will continue to follow the 50-day up in the right direction. You'd like to see it start going up, but obviously this setup is probably looking a little, you can see Q3 earnings beat. They moved up a little bit on the earnings beat. So maybe, just again, without digging into the story too much, maybe a little bit of a better situation here. They're trading at their average 10-year EV/EBITDA, it looks like, but they're a little bit below their 5-year. So over the last 5 years, we can see here, they're kind of on the lower end here. If we zoom out a little further, they're more on the average. So maybe not quite as cheap as Booz Allen Hamilton would then be. This is where all the complexities come into place when you're trying to rank these insider purchases against each other. These guys also have been buying up the stock like crazy. They had a $400 million increase to their share repurchase program back in April, and they then increased it again by $500 million this quarter because they're already almost through that whole $400 million purchase. So they are buying a ton of the stock. They just had earnings. They raised estimates. You've got the CEO buying the stock for the first time after a ton of selling. Not as cheap and not as big of a drawdown as Booz Allen Hamilton, but better technicals probably. So kind of an interesting dichotomy between those two professional services businesses. Anything else quickly that were kind of fun here? You can see Eastern Bankshares. So we can see the handful of insiders buying the stock, which in this case, they did just get a few more purchasers here. Most of them were actually happening kind of back here. I clicked the wrong thing here. Most of the purchases were back here. We had 5 insiders buying here, 2 more insiders buying here. So that's why we saw this one on the most bought list. OBK was another one you'll remember that we saw on the most bought list here. And we have all 9 insiders buying the stock at one time here. So, tons of insiders buying the stock, a lot of them with pretty good returns, it looks like. Yeah, pretty good returns here, as we can see, at least on the 3-month returns, above 20% for all these guys. 9 of them buying the stock. It looks like the last time all these guys bought the stock was back in May of 2023, and the stock went up 17% in the next year, 20% in the next 3 months. So, again, I don't really like banks. I don't really like insurance companies. I don't really like REITs or income funds or any of those kind of things, but occasionally you see some things come through and you're like, man, 9 insiders buying the stock with good returns for a decent chunk of them. Last time they all bought the stock, it went up quite a bit. All of that does get kind of interesting. Looking at the EBC, we can see these insiders buying the stock back in April. Stock did actually go up quite a bit, 16 up to 19, before then falling back down closer to where they bought the first time. So another bank situation, which we talked about before, that you could go take a look at. Overall, I mean, there's a ton more to go through. We went through most of these in previous videos, so go take a look there. And then also, this is why you should go to CEOWatcher.com and sign up, because one, you can look through all of them yourself, but secondly, if you sign up, you'll get put on the email list, which has a daily email where we talk about all the most interesting insider trades that come through each day. And on top of that, you will have you can join the Discord where I write all my notes, and you can get real-time alerts as insider trades come in. So I think overall, the main takeaway from the week is quite a bit more bullish of a week here, closing out a pretty bullish month of October. So we'll see what the rest of the year has in store. Don't forget to like and subscribe, and I'll talk to you next time.